Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market Analysis, October 18, 2023. Starting in Asia, Hong Kong stocks erased an early rally after data showed China's GDP grew 3.9% in the third quarter, beating forecasts of 3.5%. However, September retail sales disappointed with only a 2.5% increase versus expectations of 3.3%. While the data confirms China's economy is recovering post-lockdowns, the property sector remains under pressure. Distressed developer Country Garden Holdings is set for its first ever default as a grace period expires on a dollar bond interest payment today. An index of Chinese property companies hit its lowest level since 2009 amid slumping home sales and liquidity issues. The mixed Chinese data failed to inspire lasting confidence, as stocks were also weighed down by rising geopolitical tensions. An explosion at a hospital in Gaza prompted the last-minute cancellation of a planned summit between President Biden and Arab leaders. Israel has blamed Gaza militants for the blast, which killed at least 10 people. The uncertainty sent oil prices higher, with WTI crude rallying over 2% to top $88 per barrel. Safe haven gold also bounced back above $1,650 an ounce. In currency markets, the British pound hit one-week highs after UK CPI inflation accelerated to 10.1% in September, exceeding the 9.8% forecast. The hotter-than-expected reading suggests the Bank of England may need to continue raising interest rates to combat inflation. Gilt yields climbed, with the UK 10-year yield touching its highest since 2011. Across the Atlantic, the strong U.S. retail sales and industrial production data on Tuesday has prompted several investment banks to revise higher their Q3 GDP estimates. Retail sales rose 1.9% against expectations of 0.5%, while industrial output increased 0.4% versus 0.1% expected. The data highlights resilience in consumer spending and manufacturing despite rising interest rates. U.S. stock index futures are slightly lower this morning, with the S&P 500 contract down 0.2%. The U.S. 10-year Treasury yield steadied around 4.02% after hitting fresh 14-year highs yesterday following the robust data. Market pricing suggests over 60% probability of another 0.25% Fed rate hike in January. In corporate news, Netflix, Tesla and Morgan Stanley are due to report Q3 earnings after the bell today. Investors will be watching for signs of slowing subscriber growth at Netflix, delivery numbers from Tesla, and trading revenue trends at Morgan Stanley. Turning to Europe, the Eurozone CPI report tomorrow is in focus. Headline inflation is expected to rise further to 9.9% in September, adding pressure on the ECB to continue aggressive monetary tightening. The German PPI today could offer clues, with forecasts pointing to a 45% jump in producer prices from a year ago. In the UK, September retail sales data is due on Friday after better-than-expected employment numbers yesterday. The strong jobs market may ease recession worries slightly, but the Bank of England's tightening path remains data-dependent. Finally, in Japan, the Bank of Japan conducted unscheduled bond buying after the 10-year yield hit levels last seen in 2015. However, there is growing speculation the BOJ could tweak its yield curve control policy at its October 28 meeting. A further rise in Japanese yields and the yen seems likely as the divergence with other global central banks persists. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Starting with Europe, revisions to Eurozone September CPI inflation data are due later today. The initial reading showed prices rising 10% year-on-year, so any upward revisions could add pressure on the ECB to continue aggressively hiking interest rates. Core CPI, which strips out volatile food and energy costs, is seen ticking higher to 4.8%. Tomorrow's Eurozone PMI surveys will also provide clues on whether the bloc is headed for recession. In the UK, CPI inflation held steady at 6.7% in September, while core inflation edged down to 6.1% from 6.2%. The readouts were in line with expectations. Despite easing slightly, inflation remains well above the Bank of England's 2% target. However, the solid UK jobs report yesterday pointed to ongoing labour market resilience. Sterling initially saw little reaction to the UK data, with pound sterling to US dollar trading mildly higher around 1.22. The pair has bounced back from multi-year lows near 1.03 in late September amid stabilizing UK fiscal policy and expectations for further BOE rate hikes to combat high inflation. Across the Atlantic, September housing starts and building permits are due later today, followed by the Fed's Beige Book this evening. The data comes after stronger than expected U.S. retail sales and industrial production yesterday boosted Q3 GDP estimates. Turning to equities, U.S. index futures are little changed after Tuesday's mixed close. The S&P 500 ended flat while the Nasdaq fell 0.2% ahead of major earnings this week. Tesla, Netflix and IBM are reporting today, while AT&T, American Airlines and Dow Component Travelers release results tomorrow. Geopolitical tensions remain elevated after an Israeli airstrike on a Gaza hospital killed 10 Palestinians on Tuesday. The incident prompted Jordan to cancel a planned summit between President Biden and Arab leaders. Israel denied carrying out the strike, instead blaming a failed rocket launch by Gaza militants. Adding to uncertainty, President Biden arrives in Israel today to meet with Prime Minister Netanyahu. In Asia, Chinese GDP beat estimates, rising 3.9% year-on-year in Q3, but retail sales disappointed at just 2.5% growth. The mixed data confirms an uneven recovery as the property downturn persists. Hong Kong stocks erased early gains to trade lower, while the yuan weakened slightly against the US dollar. Looking at currencies, the US dollar index trades within a narrow band above 106. Having hit 20-year highs above 114 in late September, the greenback has eased lower as markets temper expectations for Fed rate hikes. US dollar to Japanese yen is holding above 149.50 after bouncing from 32-year lows last week when it plunged through 145 on suspected Bank of Japan intervention. For now, the divergence between BOJ and Fed policy continues to weigh on the yen. Finally, in commodities, gold rallied to $1,940 an ounce, its highest since mid-September, helped by a weaker dollar and haven demand. Meanwhile, oil is lower with Brent crude slipping back below $90 a barrel. In conclusion, we'd like to thank you for watching Market Briefing, market analysis and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.